Good morning, YouTube. How's it going? So I decided to kind of create a backtesting template for the people who are asking about, the way I'm trading this Silver Bullet, and kind of to give you something to work through the session so you can see for yourself. I gained a lot of value from going through and seeing how this worked, seeing how it repeated over and over. Built a lot of confidence for me to then be able to not hesitate and just pull the trigger when I saw the setup. So I've been kind of going through it with some of you guys. So this is starting out. This is just for the people that I've already been kind of dealing with, just to give you something to do that you can, build that confidence for yourself and go through and just get you into the charts. That's the main thing. You need something that puts you in focus, to constantly go through and identify these criteria that are needed for this setup to work. So there's probably a little more in here than really is needed, but it's good to be aware of these different criteria, kind of where you are in the chart, what type of market structure shift we had, which fair value gaps you're using, things like that. So I mean, if you want to do what I did to get what I'm trying to get, this is what I went through. It's painstaking, it's time consuming, but it gives you that extra level of edge, I think, that we need, rather than just somebody telling you, hey, look for this and then do that. Well, using a backtesting template and going through the sessions slowly, meticulously, trying to identify each time you see this particular pattern. It's just one pattern. It's what I call just my A+ setup. It's basically the 1 minute silver bullet, and I might expand the times a little bit. I might cheat a little bit on the market structure shift, but those are the things that I found worked for me by going through this process. So I refined it down to what I'm really comfortable with and what I'm really been having just an amazing success rate with. I mean, I've done several of these different back tests. This is an example of one I did that was pretty much a month. Starting, I would basically go through and start at the beginning of each session, London, New York 1 and New York 2, those silver bullet times, and I would look to see, does it form? If it does form, which criteria are met, okay? And if it didn't form, then there was just no trade. I didn't put anything in here for a no opportunity, other than if it formed but it didn't meet the criteria. Like this would be a good example, the very first one. So I didn't take a trade because it didn't offer 10 points and it wasn't in the discount array, which I'll explain here in a minute. So that knocked it out of consideration for the trade. It didn't fail. And some of these, I think I put, they won even though the criteria wasn't met. So maybe the risk was low, or there were some other contributing factors that allowed me to take the trade even though every criteria wasn't met. But I want to keep track of that kind of stuff so that I know, okay, there's some flexibility. So so I'm going to go through there. I put notes up at the top of each one of these. I'm going to blank this out and I'm going to share this template. I'm going to extend it down to where you've got like hundreds of lines that you can do, to do this yourself. But I put notes in here to kind of explain what each category is for. So what this means is, let me pull up an actual chart here. Let's see, I should have had that up already. Here's a good example. So here's multiple fair value gaps right here, okay? If it's asking you which fair value gap you used, the first one is always going to be number 1, and then as you go farther away, this is 2, this is 3, this is 4. This is important to know that when you have multiple fair value gaps, you want to know, does it generally retrace back up to the first one? I mean, if you see a lot of that where the first one gets tapped out of 3 or 4, that tells you that in the future you're probably going to want to wait, or depend on how much risk you want to take to try to absorb 2 of those fair value gaps in one trade, right? Because if you see this kind of a setup right here, you're all the way down here before anything really gets tapped. I would have got in here because I always add a tick to my fair value gap, so this would have tagged me in. But you need to recognize that how much risk are you going to try to take to cover in case it does go up here, because in your back testing you see that a lot of times it does pull up into this second or third fair value gap. So that's all that means, is which fair value gap you actually took the trade in. 10 points. Does it offer 10 points? Okay, so when you're in the range, say we're going to take a trade, we're looking at this. You're looking at liquidity levels, so you're going to have your stuff drawn out for your levels of liquidity. You'll have a line, like this would be a low from up at this point before this gets broke. We're looking at this low. So do you, where you took the trade, did you have 10 points of room down here to 64? So that would have been anywhere from here up. You had 10 plus points. It doesn't mean you can't take it. Again, we're just looking for probabilities, and if you're finding that you're taking trades that don't offer 10 points a lot, or in your backtesting you see that those fail, they don't reach because the move has already happened, it's already extended quite a bit, that gives you that confidence you need to know, yes, I can take that trade, or no, I can't take that trade. That's what backtesting does for you. Discount and premium, similar idea. You're going to take a fib. You're going to fib your 50% from your leg, wherever you're at, high to low. And to take a short, you want to be in the upper range. This is discount. If you're taking a long, you want to be in the lower range. So if you're looking to take a long, right, liquidity's been swept here, but you don't see your setup until you get way up here, you're taking a trade in premium that doesn't offer 10 points, and every time you break one of those criteria, you lessen your odds for success. Even this trade would have been from 77.50 to 82.75. It's still basically a 5-point trade. You could win here. You could, okay? But you need to recognize that you're working with a less probability of winning. So, over time that might hurt you. If you're only looking for a few points, like I am, because of the multiple accounts, I'll take a trade here and look for a couple 3 points. That's a huge displacement. Good upper market structure shift going the other way. Fair value gap gets tapped right away. I would maybe get in that with a couple points of risk. I'm not going to come all the way down here to the swing, but if I feel strongly about this move, I would get in. But again, for consistency and just trying to absorb material and put you into the charts, that's just something you want to be doing. Fibbing it, being aware of where you are in relationship to that discount premium. So this one is the market structure shift candle. So when I look at the market structure shift, to me there's strong market structure shifts and there's weaker market structure shifts. So in this particular instance right here, let's just say this is in a lower level. This is one single candle that broke the high and also created the fair value gap. So for me, this would be a single. Okay, the singles are the strongest, kind of the strongest indicator, that this is the setup you want. Sometimes you'll get multiple candles like this that end up finally breaking the market structure shift or creating the market structure shift, and not necessarily the candle that broke was the one where your fair value gap was. So this will be a multiple. Okay. Again, it's just helping you identify the difference between your win rate on what happens when you get this type of market structure shift versus what happens when you get this type of market structure shift. Both are valid. It's just a matter of training you to be in the charts, looking at it, being detail oriented, things like that. And then over time, as you build your database, you'll have percentages and you'll have odds that if you take enough of these back tests, eventually every one of these criteria breaks down into either a better or worse percentage. So between this one and this one, which one's the highest probability where the trade actually worked out? If you do that with every criteria, you narrow down your process, your setup, to which one is absolutely the best, A+ bread and butter setup. Not saying you won't take the other one, but maybe the other one you won't put as much risk on. Maybe the other one you don't target quite as high. There's all kinds of things that are in play when you're deciding what to do with these trades, and by finding which one has the best chances of winning, you can then adapt that and make it work better for you. Sweep. So sweep is very important. Did we sweep liquidity? So we've got our liquidity lines drawn out. Did liquidity get taken before we took the trade? Now you can calculate, you don't have, since you're just back testing, you can see how many times it was close or how many times, that's up to you. I like to wait. If I put my lines down there and up there, I'm generally not going to take the trade until one of those lines are broken. Now there's times later in the day, and sometimes I'll take advantage of the end of session moves where maybe liquidity was taken, it bounced around a little bit, but I know from using like the DR Lens database or whatever that there's a high probability from an extension even from this point. Okay, I would still take that type of trade, look for the the displacement in the market structure shift, even though liquidity was taken earlier and there's been some consolidation. But for the most part, just from just straight silver bullet type executions, you want to make sure there's a sweep there. Retest. Retest is when a fair value gap's created. Which candle was the one that actually tagged you in? So it's a 3-candle pattern. So this would be the first opportunity for a candle to qualify for that criteria. So in this instance, it would be candle number 2. Okay, candle number 2 was the one that got you in. And what I found is there's a number, and I'll let you figure that out for yourself. That's part of what this is designed to do. That if you wait so long for that fair value gap to get tapped, your odds are going down a little bit, and there's a chance you'll have it come back up into the range even more for a deeper retest. It doesn't necessarily mean the trade fails. It just means it's a little more stressful trade, and the odds go down the longer you wait. Ideally, what you want, if it's an energetic move, you want the first or the second candle to tap that fair value gap, and then just head the other way. That's the best way, best case scenario. Let me go to a 1 minute here. Find some examples real quick. This is just for London and New York also. Well, here's another example. This would be the third fair value gap. This is the one that was tapped at the bottom, and it was tapped by the first candle. Okay. Now, this next one is, was there a deeper retest? Okay, so that's the next box here. And what that means is once your fair value gap was tapped, did price come back in there and tap it deeper? Okay. I use that to show that in many cases that trade still works if it's within a few candles. It's still high enough probability. You don't need to get out. You don't need to take break even right here. A high percentage of these that do retest and go deeper are still winning trades. So even if it comes back up here and tests it again and goes deeper, it's still a good chance for a deeper trade, or a deeper retrace that still wins. So some of this, like I said, is important for understanding the criteria you want to use for your best case scenario, and some of it is just honestly busy work to get you focused. I felt like this was a decent number of things to really help me zero in on this setup and every little piece of it. There's multiple moving parts going on in there, and I kind of wanted to be aware of each one and just look to see what jumped out at me. So that's what these are. Okay, this is your stop loss to the swing. So usually when I take these trades, I'm trying to use the very liquidity level that was just taken for my stop loss. So say this gets taken up here, say this was a high up here, say this was the high that got took. Okay, here's my sweep, here's my down move the other way. How much distance was there from here where the trade entered to a couple ticks above the swing? Okay, so in this case that'd be an 8-point stop loss. All right, so that tells me I'd had to make some adjustments here. I'd had to either go, because I'm not going to do 8 points, I might have went to micros, 5 micros, cut my size in half, and then I would have went up here because that would have been more like a 4-point actual stop loss, which I'll take that. So yeah, how much did you need, and how much did you actually use? So we only actually used like 1 tick of stop loss here. Okay, and that's what these 2 different boxes are for here. Stop loss to the swing and stop loss actual. And what I gained from this was understanding that there's a lot of times I can get my swing because I'm taking the trade where I am at those areas of, the sweep. I'm already close to those levels within 5 points or so, okay, which is my comfort zone. There's a couple here that were a little higher. That's fine. I might have either took it, depends on the energy of the move, how big the displacement was, how big the fair value gap was, what time of day it is. There's other factors that go in. But my confidence level that 5 points holds comes from my back testing here and saying that the swing is a good spot to be. And then this is also interesting because the actual distance that's needed is really very small, right? I think 3 points wins most of these trades. So that helps me understand that if I don't necessarily have, it's way over 5 points, I can still get in and just put 3 points in there, and see where that puts me. Because 3 points, a lot of times, and the reason for that is we're already identifying that we're in a momentum move. We've already broken market structure. We've already seen a big energetic displacement candle. So price is moving. There's no reason for it to, want to retrace, go back. We're basically trying to take trades that are already headed in the direction we want to go, and we're just catching a ride. So this is really encouraging to see that in most cases there's very little drawdown when all these criteria are met. Now, if I'd had a 3 point stop on these, I would have lost this one. 3 points and a tick. I mean, I always like to add a tick or two to everything I do. So I would have lost that one, maybe, depending on if I went 1 or 2. But that's, still a very, very, very good win ratio, with 3 points. And that's what is learned from doing these calculations. So when I go into the trades, I have all this in the back of my mind as what I have in my toolbox, how I can react to different market conditions for this particular trade. I can use 3 points. The swing is good. It's just stuff that you want to have ingrained in your head, and it's through repetition that you do this. I can't encourage you enough to take the time, get into the charts, and do your back testing. It's it's hard to do when it's live. I mean, you can try to mentally, paper trade and things like that. But I find that just when the market's closed, I can go through, I can take my time to get these measurements. I can get my time to make good judgments on what I'm seeing, and I can build data. And just like with DR, IDR, data is king. You have this data, and it changes the way you think. It changes the way you approach the trades. And in a lot of cases, that's the change we need. So gain 1 and gain 2 is basically, I will look at how far the trade went painlessly. Okay, so down to the first place where there was enough retracement where I maybe got out. So if I was to measure this, let's just say I took a trade here, I would have measured to that right there. So that's 14 points. Now the trade obviously went, it went 27, but I wouldn't have held for this 5-6 points of reversal. So, to be realistic, how much would I have made on that trade is this amount right here. Because most of the time I'm not using runners or, taking partials. I'm looking for a, good 1-to-1 trade that wins, 60 or 70% of the time. and that's all I need. So, but I want to know also for future reference, and as I'm able to adapt my strategy, how much am I leaving on the table? So when I go back and I look at this, here was my game 1. Okay, on this trade it was 11.5 points, an easy 11.5 points in 30 minutes. Well, guess what? If I'd have managed to maybe go with micros and leave some runners out there, or add a contract, something like that, it actually went on to 26 points. Now that took almost 3 hours, but you're at break even, you're whatever, you're kind of letting it run, you're looking for your sort of your DR, IDR type risk to reward and higher time in the trade setup. So I want to be aware of what I'm leaving on the table, so I know what I can expect if I can adapt my process a little bit to capture some of that. Is it even worth the work? Well, yeah, I mean, this is worth the work right here. This is what the easy gain was. This is what the overall gain was, right? It's double. Some of these it's the same, okay? But look at the difference from 750 to 20, 675 to 10, 10 to 27. There's enough in there to work on, expanding my process a little bit to capture that. That's all I'm saying. the break even, I'm going to delete that off of the template that I'm giving you guys because it's not really effective. I was trying to see how far it went away and came back and became a break even trade, but for the most part they don't. So just to avoid confusion. So that's what this is. Obviously, here's your sessions. Here's your win loss, none, break even. And then over here, take a picture of your 1 minute, take a picture of your 5 minute. This is good for reflection, to have these, because you can always go back and see what it is that wins. When you start, having a losing day or something's not going right for you, what I did was I went back through my old pictures, my old trades, and I see, is this the trade I'm taking? Is this why I'm losing money? No, it's because I started doing other stuff. So I've got this whole database of pictures of trades that I took that won, and then I just go back and I look and I'm like, well, there it is. There's the sweep. There's my market structure shift. Here's my first fair value gap. Here's my second fair value gap. I'm in, huge win. Over and over and over and over. I want to just do the same simple, boring setup that makes a boatload of money. I mean, why go chasing a bunch of other stuff and doing different things? This is the setup that works for me, right? Here's your sweep. Liquidity was taken from over here somewhere. We're on the way back down. Here's your first real big push. Market structure shift creates a fair value gap. Okay, we get in. Boom, huge winner, right? Comes back up, taps it again, take another huge winner. This works. This is over and over and over. Like I said, I can't stress the importance of finding something that just repeats and is simple, right? Same thing. Liquidity swept, big push, breaks market structure, displacement candle, fair value gap, enter, huge win. Okay, and having these pictures, makes it easy to then go back and just, it's good for refresher, builds your confidence. See a pattern here, right? Sweep, multiple candle, displacement, breaks market structure, creates a fair value gap, gets retested, huge win. Oh, you missed that one? You hesitated? Here, take it again. Same thing. Displacement, breaks market structure, creates a fair value gap, retest, huge win. Okay, so for those that are asking what I'm doing, how it's working, it's really just the basic ICT Silver Bullets that I've kind of just went through and added some detail to, and I'm having just amazing success with it. So here's another one, big displacement candle, breaks market structure, retest. Here's a deeper retest, right? But my stop loss is up here, most likely. We're sitting at 41.39 and a half, 41, a couple point stop loss to get all the way up here and be safe, right? Huge winner. So I've gained a lot of benefit from that. I give this a lot of credit for the success I'm having right now. And nobody knows what's going to happen next week, but for right now, I'm enjoying this period of doing well. So and I think this is a big part of it. And for those of you that are I've been putting it out there that I'm trying to help people and just more or less being able to point you in the right direction more so than actually trying to teach you how to trade. I can save you some time, get you out of some rabbit holes, and just try to give you just one simple setup that if you'll invest yourself in that, maybe it can be the foundation just to get you to where you can make some money, and then you can build on that. If you want to add other stuff, fine. But honestly, between just this and what I'm doing with DR, there's no reason for me to take any other trades or look anywhere else. I want to get better at what I already know. I want to master a couple things and to where I can just do it in my sleep. I think that the best traders are the ones that are highly effective. That's kind of what they say. They try to keep it simple. They try to keep it mechanical. There's not a lot of noise going on. They know what they're looking for. I will sit and I will wait for this trade until it happens. It happens often. When I get in trouble is when I'm waiting and I see something that I think, oh, I bet that's the top, or this might be the bottom, and I start thinking I can put a couple points in there and try it, and I lose, and sometimes it even gets stupid because I'll get frustrated. I'll not only lose, but I'll move my stop loss and lose more. So why do that? Why go through all that misery just to be, maybe it's a dopamine thing, maybe it's something in my head. I don't know, but I'm fighting that. And I'm when I just wait for my setup, it comes. It's usually pretty low risk, low stress, and I don't need a lot of points. So depending on how much you're trying to get makes a difference. But this is good for usually 5 points. And up to 10, 12, 20, right? But if you want to get 5 points a day or 5 points a trade, this isn't a bad approach. You need to go through the charts and figure out, you need to see it for yourself, because just looking at mine and me telling you is not the same as you putting the work in and getting excited over what you're seeing, and then, having that anticipation to get into the actual market and watch it play out in real life. There's few things that are that fulfilling. I've really enjoyed this process. So I'm going to put a link in the description. I'm going to put this out there to where anybody can download it. I'm going to erase all my information, and I'm going to clean it up a little bit, and I'm going to put this out there for you, and I hope you'll get some use out of it. If you're coming and asking for help, I'm going to ask you, well, are you backtesting, or are you working on the little setup that I've already showed you? And if so, this will answer a lot of questions for you, at least give you something you can start on without us having to sit in Discord for an hour talking about trades and setups and things like that. I'm giving you everything that I would give you in a session, or talking to you right here, and then it's up to you to kind of go through it. And obviously, as you're doing it, if you have questions, come hit me up. I'll do whatever I can to help you with your questions. I created a channel in the Discord where you can mark up charts, and we can talk about them. I can give you some feedback, see if we agree, that it was good, or what maybe could have done differently. I also put a resource list in the Discord to where I point people to get started as new traders. There's ICT, there's DRIDR, there's the ICT Kraken Silver Bullet channel. That's where you need to be. You start with that kind of stuff, and that takes you away from a lot of the wrong directions, forks in the road type stuff that we waste months on. So this is my opinion of what works. This is what's worked for me. Obviously, and others are wildly successful with this stuff. So it's just a matter of you adapting it to your own personality, making it yours, enough repetition to where you can execute efficiently, manage your risk. And I don't see why you can't do the same thing I'm doing and what others are doing. So that's basically what it boils down to. So anyway, links will be in the description. Give me some feedback. Let me know how this is working for you. Come hit me up in the Discord, say hi, and I guess that's it. Y'all have a great day.